Perfect. So this panel, we are talking about RWAs. I think that's a topic that has been getting a lot of interest in the space. And so we have a number of different leaders up here in the RWA space, from things like layer one blockchains, oracles, like tokenizers, and kind of everything in between. So we should be getting some really good breadth. I guess just first to kick it off, just so you know who is up here, maybe we can quickly go down. Everyone can introduce themselves and say a little bit about what their respective company does.
Sure. Yeah. Hey, everyone. I'm Dillon. I'm leading the BD team here at DIA. DIA is one of the co-hosts of this event. We are a cross-chain Oracle provider. So we are currently live on 56 different chains, a bunch of EVMs, also a bunch of non-EVMs. And we are historically specializing in on-chain token asset price feeds, so really crypto-native token price feeds. And looking forward, we see real-world assets as arguably the biggest opportunity for oracles and servicing, where we see this industry heading. So we're launching an upcoming upgrade to our architecture called Lumina. This is like our breakout event, hopefully, for what's to come with Lumina. And within the scope of Lumina, we've really placed a strong emphasis now supporting historically, obviously, these token price feeds that we've always done well with, but really how are we going to expand the scope of asset price feeds to really comprehensively support real-world assets. And so really excited to be here with some of the leaders in the space today and share some insights into how we're tackling this.
Cool. My name's Jasmine. I usually go by Jazzy. I lead the product team within RippleX. RippleX is a business unit within Ripple that focuses on the layer one blockchain, the XRP ledger. Some of you may think of that as the Ripple blockchain. It's really called the XRP ledger. And our team works on proposing new amendments, features, capabilities for the ledger to enable various use cases along the lines of DeFi, NFTs, anything else that you'd like to build. We have a number of other teams supporting developers, developer programs, tooling, libraries, et cetera. So all things XRP ledger. Ripple, the other side of the company obviously has, cross-border payments, custody, stablecoin as well. Those are other businesses which I can touch on, but a little bit separate from RippleX and our focus on the blockchain. In terms of my background, I've been in fintech for a long time. Spent a number of years in mortgage tech, started a company in consumer financial health, and just saw blockchain as the next evolution for improving on-chain finance and removing some of the challenges and inefficiencies in TradFi. So yeah, that's why I'm here, and great to chat with you all.
Hey, I'm Dominik. I'm the head of ecosystem and growth at Li.Fi. We are one of the leading bridge and same chain aggregators. In that, we power over 400 B2B integrations, as well as Jumper.exchange, which is our own B2C interface. I'm excited to talk with you guys about RWAs, which is kind of like the next frontier for us at the intersection of Web 2 and Web 3. We're very excited to, talk to all the players in that market, like Ondo or Ripple, and see how we can power the on-chain asset transfer as well as swapping for these new assets.
Hey everyone, I'm Matt. I work on BD and DeFi strategy at Ondo. Everyone's probably heard of Ondo, but we play in the real-world asset space. We handle a lot. We're really trying to sit in between traditional markets and DeFi markets, and bringing institutional-grade finance on-chain. So we do. Today we have a couple of products live. We have like a pretty large roadmap. I'll get into it later in the talk. But I think you can generally think of us as like the one of the more dominant players in the tokenized treasury bill and money market space, not just by TVL, but also by number of users. I think something like 80% or so of the wallets that hold a tokenized treasury bill are holding an Ondo product. And we're very, very proud of that, because a huge part of what we're working on is actual adoption and not just tokenizing assets and holding them on chain.
Awesome, thank you. All right, I've now got like a few questions that I want to ask everyone. Actually, I want to start with Matt, because I think the question I had for you is very relevant to the very last thing you just said. So Ondo, you guys have a very wide variety of different tokenized assets. And so I'm curious, from your perspective, what makes an asset good to tokenize? Like what, when you're looking at an asset, why would you think, oh, that would be good to tokenize versus one that maybe wouldn't be? And maybe like kind of related, how does Ondo prioritize which assets to tokenize?
It's a great question. So I think we tend to think about this a little bit differently from a lot of the players in the tokenization space. A lot of people tend to think of tokenization as, tokenization gives you like a few like crucial advantages. It's got higher transparency versus non-tokenized assets. It's got better interoperability, better usability, DeFi, opening up like permissionless markets on these assets is like very, very powerful. One thing it doesn't really do that well, though, is actually increase liquidity. And a lot of people think, kind of tend to mix this up, right? So sometimes people will tokenize private funds that, don't trade that much in secondary markets off-chain, thinking that there's just going to magically somehow be liquidity for them on-chain. We saw this a lot in like 2017 with like, real estate tokens, right? Where you tokenize a house and you try to sell shares of the house, and then people kind of scratch their heads and they're like, why doesn't a market just create itself? And the answer is that liquidity on-chain is very expensive, right? You have much more credit availability off-chain. And so if you're trying to be a market maker in the equities markets, like a lot of these things that we think of as bugs are actually features. T+2 settlement enables you to like provide your counterparties with more credit, right? When you're providing liquidity for assets on-chain, though, they kind of have to be fully funded up front in most cases. And so your cost of capital as a market maker is very high, especially with like rates where they are. And so liquidity, this all kind of goes back to say that like our top priority is really tokenizing the most liquid assets with deep existing liquidity in the TradFi markets. And for a lot of assets, it's worth it to create that secondary market liquidity on chain. And I think you see this with like tokenized treasuries. There's like a variety of ways, just not across just Ondo products, but all of these tokenized treasury products to get stable liquidity, RLUSD, for example, interoperable with your tokenized treasury bills. But treasury bills are like a very unique asset. They change hands a lot, right? They are kind of used for funding, and you might want to trade in and out of them very frequently. For a lot of assets, though, like you just don't have that same need for on-chain liquidity replication. And so a lot of what we're working on is trying to find ways to tap into the deep off-chain liquidity for a lot of assets and tokenize those as well.
Awesome. That's actually a super pointed answer. Thank you. That was very good. Dominik, so last May, Li.Fi announced that you could mint T-bills from 15 different chains. And so why did you guys start with T-bills as opposed to other assets? And then like kind of like the logical follow-up to that, what are the next assets you guys are looking at tokenizing?
So maybe this is a bit of a loaded question because it's like we don't do that ourselves, but our partners use us underlyingly in the routing. So we have a lot of partners on the B2B side of things, as I said. They issue the assets and use us then in the back end basically to find the best pathways for them on chain. And as you said, most of those ones that we're working with right now are T-bills because, as you just said, they are basically the most liquid assets in the market. So from the tokenization perspective on our end, the issuers of those assets are the most interesting ones because obviously for us it's most interesting looking just at pure volume at the end of the day and those are the ones doing the most volume. So that's kind of where we started to look at partners to do this with. I think now obviously the main new market that is emerging are stablecoins. There's tons of players, established players issuing stablecoins. And also there's a ton of more exotic stablecoins for more exotic currencies that are getting issued. And we're looking at more liquid markets for those on chain. So yeah, that's probably the second sub-market there that we're looking at. And we think a lot of growth is going to happen in the next 2 years.
Awesome. Thank you. That is super insightful. Jazzy. So Ripple, you guys have DeFi solutions for tokenization, and like I know it's pretty targeted at like institutional lending, or at least like I know you have products for that on XRPL. And so as institutions move beyond just stable coins, what is driving their interests in tokenizing wider ranges of assets?
Yeah, it's a good question. So just to back up a little bit, I mean, our job within RippleX is really to build the building blocks and foundational components for players like Ondo and other institutions to issue real-world assets on blockchain, and then also use them for generation of utility, improvement of their businesses and KPIs, as opposed to just letting us sit there. So, the XRP Ledger DEX, for example, has been around for over a decade now, and where our team is looking is, how can we allow institutions to actually move their business, take this stablecoin volume onto the decentralized exchange, and actually unlock some of the benefits of blockchain that we're not getting when we're stuck in centralized exchanges, because that's the only compliant rails that are available. So we're working on a new feature right now called Permission DEX, which basically allows for a permission environment within the broader permissionless DEX, so that you can have KYC'd players trading on the decentralized exchange and also arbitraging with the public decentralized exchange at the same time. So we're really trying to kind of bridge the gap between purely decentralized finance with some of the regulations and requirements that regulated entities need to transact on chain. So that's where we're looking right now. I mean, the stablecoin volume obviously is one of the first RWA assets to actually have product market fit. But if you look at the market cap, we're just over 200 billion today. So if you compare that to, a single S&P 500 company, we're looking at, number 200 on the list or so. I think GE has about, a similar market cap. So we have a really long way to go, with stable coins as they start to be used in payments and trading, and then money market funds, T-bills, as they start to be used in more complex use cases, whether that's, cross-chain collateralization or lending and borrowing and whatnot. So we're really just trying to build the rails to support all of that. So Ondo, FIs, and the like can really build on top of that.
Cool. Awesome. Thank you. Finally, Dillon. Been waiting patiently. So Dia, a bit different from these from the other projects, in that you guys are an Oracle, and so you guys see a lot of what like small, not necessarily small, but like newer startups are trying to get on chain in terms of price feeds. And so, what are the new types of price feeds that Oracles are seeing? What is the demand for new types of price feeds Oracles are seeing, particularly related to real-world assets?
Yeah, so it's been evolving. When the real-world asset demand started to really come in, and just to take a step back, the way that I personally, at least, consider real-world assets might be a little bit more broad than most. I think of a real-world asset as, pretty much anything that is an asset that exists off chain. Right? I follow like Larry Fink's thesis that like everything will be tokenized, or at least that's the bull case for this that we want to be well positioned to satisfy from the infrastructure side. So starting off, we saw a ton of demand on the commodities, forex, and equities pricing. And as has already been discussed, really I think the best go-to-market use case for one of these feeds so far has been Forex to support cross-border payments and stablecoins. And so we've seen a huge demand for those, right? And exciting, innovative types of applications, like requests for the Nigerian Naira for cross-border payments, or the Brazilian, I believe it's the Real currency. So that's really where the demand from dApps initially started to come in. These more these asset classes off-chain that have traditional markets from which that are highly liquid and have high volume, from which you can source high confidence, robust price feeds. But what we're seeing now is the evolution of this, and it's getting way more niche and long tail. I'm seeing demand for everything from luxury goods like watches and cars, providing price feeds for those on chain, providing carbon credit. And the carbon credit market is not extremely efficient, so there's some inconsistencies there. We're seeing demand for bond ratings, other types of unique financial metrics to be brought on chain. And so I consider all of these within the scope of real-world assets, right? Really looking at what is the off-chain asset data in any regard that needs to be brought on chain, and what we're doing is we are striving to be the player in the Oracle space that's well equipped to satisfy all of these different types of unique niche one-off use cases. We don't want to only focus on the blue chips. DIA historically has been the provider that strives to have the broadest asset coverage of any Oracle, and we want to relate this back to the RWA space as well. So it's getting really exotic, really interesting. And we're having tons of these conversations right now. We're chatting with, we're supporting xRPL and having some exciting conversations on the institution side there as well. It's just really about, I think it's also super early too. And I know this is kind of like the theme of the conversation, of the discussion here. It's like, are we early? Are we there yet? Like where are we within the scope of real world assets? From the infra side, I think it is still early, because as we see all of the demand start to grow for these niche one-off use cases, these real-world assets, I think infrastructure providers still need to question how they're going to be positioned to support all of this demand at scale over the coming years. And so that's kind of what we're seeing now.
Cool. Thank you. That was awesome. I'm actually now going to move back down. I want to ask a little bit about the Ondo and Ripple partnership, because I know that you guys are doing some work together. So Matt, I guess I will start with you. So Ondo, you guys announced that you are deploying tokenized treasuries on Ripple. And in the announcement, you talked about how it's really targeted at institutional investors. And so why did Ondo choose Ripple as the chain that they're deploying that on? And like, what about Ripple makes it attractive to institutional investors?
That's a good question. I'll give my personal take on it, because like the marketing announcement is all online and people can read that there. I started like really learning about crypto in like 2015, right? And Ripple was such an incredible idea because it did present this institutional grade, institutional quality, decentralized approach to finance, right? And I think even today, like you still see that institutional DNA flows through to the way that institutions perceive different chains. And so at Ondo, we're all about improving access to financial products, right? And a lot of people think that that's just like guy on the street needs like a little bit of like a treasury bill. Maybe he's on Barra chain or something. What's the opposite of Ripple, right? And that's great, right? We're here for that. But on the other side, you see institutions and like they have needs too that are also not met either by traditional finance or by like other products in the crypto ecosystem. And in the case of xRPL and their user base and community, it's that institutional quality and institutional grade product suite that we think we can really help bring to the table to help boost this ecosystem. And so we're launching OUSG there, which is our more institutionally targeted product. And what we're trying to do with this is very broadly improve availability of sort of that risk-free rate to the institutional users of Ripple, or of xRPL, so that they don't have to choose between holding money off-chain, earning yield, holding money on-chain and enjoying all of the benefits of transparency and settlement and all of that. And really bringing that institutional grade product to an institutional grade audience on an institutional grade chain.
Cool. That is awesome. And I now actually want to ask a very related question to Jazzy. What does Ondo issuing on xRPL signal for institutional adoption of tokenized assets? And how does this strengthen xRPL's role in supporting institutions looking to bring RWAs on chain?
Yeah, just to shill each other's products a little bit. No, I'm genuinely really excited about the Ondo partnership. I think Ondo plays a really important, unique role in the space. We obviously see BlackRock's Biddle, Franklin Templeton with Benji. A lot of the big institutions are coming on chain. Others, Hamilton Lane and some on the asset management side through players like Securitize. But I think what Ondo does that's really unique is it bridges that gap between traditional finance and DeFi and crypto natives, and kind of provides a best of both worlds solution where there's real utility, real value, real source of yield, meaning not the users as the source of yield, but it actually does so in a way that's crypto native, crypto friendly, understands the kind of values that brought us all here into the space. So I really appreciate what they're doing. And yeah, I'm excited for launch.
Cool. Awesome. Thank you so much. Dominik, so what is Li.Fi doing with chain routes? And I guess actually just to make sure, maybe you can briefly explain the concept of like chain routes in Li.Fi, but then what does Li.Fi expanding chain routes and where the chain supported on them mean for people that are launching products built with RWAs?
Yeah, so I mean, I think when people think about tokenization, they mostly think about tokenization on a singular chain, right? A lot of these real-world assets right now, or the Bill Fund and others, they sit on Ethereum natively or sit on Ripple natively. But that's not where it stops, right? You want a provider like Ondo wants to give access to these assets across all the major chains. And to do that, you need to then work with either some of the general message passing providers, or you need to have your own way of do cross-chain messaging, which will then allow you to issue assets across multiple chains via standards like OFTs by Layer 0 or entities by Wormhole, ITS by Axelar. Chainlink has a solution for that. There's many other ways of doing that. In essence, you need to issue some standardized type of token, and you need to have some way of passing messages across chain, which could either be centralized or decentralized, based on which security guarantees you want. What we've been working on for the past 9 months is a exclusive collaboration with a protocol called Glacis. This protocol is specialized in multi-message aggregation, meaning wrapping these GMP protocols. And this allows us to basically support any type of mint and burn asset within Li.Fi's routing. So why is that great? That is great because if you just use something like a liquidity network for going from one chain to the other with these assets, you're going to face a lot of slippage, you're going to face a lot of fees because these protocols only hold a certain amount of liquidity, where going the more native mint and burn route basically allows you to transfer any size at very low fees. So this, in our opinion, will make this whole RWA space in a cross-chain context much, much more accessible to the average user and the average business that wants to integrate with this.
Awesome. Thanks so much. Dillon, you're us again. We've been talking about all of the everyone's various products, and so I have a question about a new product that Dia launched, which is xReal, your guys' RWA Oracle Suite. What does that mean? What is an Oracle Suite for RWAs? How is it different than just like standard crypto price feeds? And what are the features and the services that are included as part of xReal that are like make it good for RWA specifically as compared to just like traditional crypto assets?
Yeah, so xReal is our venture, our positioning into supporting the real-world asset sector. And as I mentioned at first, really historically, our positioning is supporting on-chain, really a real on-chain look at crypto token price feeds. And so what we do to support those, and really to take a step back, how Dia distinguishes itself compared to other oracles, is the way that we source data is on a first-party data level, right? So you take a look at other oracle providers, they source data from off-chain third-party data providers. These are basically like off-chain centralized entities that provide data to the nodes of a given oracle. The nodes reach consensus and push information on chain. What Dia's done since the origin is try to solve the lack of transparency within that architecture by getting data directly from the source, being the DEX, the decentralized exchanges, and the centralized exchanges. Right, so historically, we've been very well positioned for on-chain token asset price feeds. And the launch of xReal is now taking a forward look into, the real-world assets are not being traded on-chain. The sourcing for that is not on-chain. So we had to expand the architecture to be able to support off-chain third-party data providers and provide a robust on-chain price feed, being able to source that data. And so that's backed by crypto economic security, right? We have a decentralized set of node operators that are fetching the data from all these sources and pushing it on chain. And looking forward with xReal, what I think is really exciting to position ourselves uniquely to be the most robust Oracle provider for real-world asset data is looking into really exhaustively implementing ZK proofs. So ZK proofs will be used as ZK coprocessors, which can provide on-chain proofs or on-chain attestation that the way that data is being aggregated and processed and distributed is not being manipulated or tampered with. But something that's exciting and a bit forward-looking here is ZK-TLS. So ZK-TLS would allow us to provide a proof for the origin of any off-chain data, right? And so this gets back to really how we want to be positioned moving forward as the trustless Oracle. You see, again, as I just mentioned, like a lot of the oracles are leveraging off-chain third-party data providers where there's a lack of pure data provenance, meaning you don't really know on the source level where data is coming from. And since we are, sourcing data directly from the source itself, we are launching Lumina, which is a roll-up-based architecture where all of the flow of this data can be tracked and validated through cryptoeconomic and cryptographic security. So the launch of xReal is really just our positioning to be able to comprehensively now support off-chain third-party data providers and support bringing that data on-chain through a truly transparent architecture that has proofs associated with it so that you don't have to trust DIA. There's no trust assumptions throughout the whole architecture.
Cool. Awesome. Thank you so much. That's great. I do have, let's see, do we still have time? I have one last quick question. I know that we started late and we can, cool. All right. All right. This is, it's the same question for everyone. So it might be kind of rapid fire, but most people here at Infra Gardens are startups. So for people building startups, what are the big opportunities in the RWA space that they should go capitalize on? Dillon, I'm going to start with you, just to switch up the order.
So I see it as like when I speak with my non-Web3 native friends, the argument is always that they'll be interested in crypto and Web3 when it has something to do with their everyday lives. And this is kind of the bridge between Web 2 and Web 3 that I see making that possible. And so as it relates to that, I think that real-world assets are the opportunity to onboard new users and new liquidity into this space that we've been looking for and asking ourselves about for, the last how many, since Matt was started getting into it in 2015, right? So no, even longer, but we've been asking ourselves this question forever. And I think as it relates to new dApps, it's early, this is nascent, and you have the opportunity to adopt and implement real-world assets, which is something that will hopefully bring in new users and new liquidity for your application. So that's kind of how I'm looking at it. We're super heavily interested on the DeFi side of that. So as it relates to let's say lending protocols, being able to support a much more broad coverage of assets that users can actually enable lending and borrowing based off of. So that's my hopefully succinct response to that.
Yeah, it's perfect. Thank you. I'm just going to keep going down the line. Jazzy?
Yeah. So I think the answer to that, unfortunately, is not super sexy. I think the real answer for startups and dApps is in infrastructure and kind of supporting what financial institutions want to do, whether it's on the issuance side or the investor side. So when you think about wallets and key management, it's not too late. There's a number of players in each part of the space, but look at Gnosis Safe and their big fumble, a couple of weeks ago just now. There's still room for improvements around wallets, key management, et cetera. When we think about bridging, the presentation we just saw about Intense, like how do we bring this whole space together and really think carefully about not only the developer experience, but now the investor experience, the issuer experience. And so if you can come up with the technology to pull these pieces together and make it somewhat as seamless and as usable as Web 2, I think you have a great chance at supporting the next phase of growth in crypto and RWA.
Yeah. I mean, maybe I'm going to shut ourselves a little bit on top of that. I think we've done most of the work for that. And so I would actually see the opportunity one level above that, which is actually the app layer. And this is kind of in that way, RWAs can kind of be the Trojan horse to onboard the whole of what is fintech right now into crypto. And it's kind of funny because it's at the end of the day, RWAs or T-bills, whatever, are this unsexy product that not many people in our generation even want to use. But by tokenizing them and then having a nice UX wrapped around them where just by holding these assets, for example, in your wallet, in your Phantom wallet or whatever, you earn 4% yield, whereas your bank gives you like, 0.2 or 0.1 and splits the difference. There's a ton of stuff that can be built on top of that. We saw that last time with Terra Luna, where there was a ton of all of these fintechs apps coming up, giving 20% yield. Obviously, we don't want to go back to that. That was not sustainable, but I think they had the right idea. And with providers like Ondo being able to bring that yield on chain in a less scammy manner, I think we can bring all of that back, but this time we can make it sustainable.
I broadly agree. I think certain parts of the infrastructure layer tend to be especially crowded. I think like asset issuers, oracles, like bridges, these are very competitive spaces, and they're very difficult, right? And this is good and bad. The bad of it is that it's hard if you're building in that space. The good of it is that you have really high quality infrastructure now, and you can actually focus on building something that sparks joy. And I think it's a little different in crypto from how it would work in like a typical like Web2 or like TradFi, industry, where there you have to start serious and start building for like the most serious users and consumers. In crypto, you see time and time again, like people that build things that get broad-based mindshare, user share, and spark joy for people can always evolve into a more institutional product in the end. And so you see this with like wallets, right? MetaMask with MetaMask Institutional. You see it with like Solana, right? Starting out as, trading NFTs and meme coins, and, now they're pushing more and more into the institutional space. So I think if I were to start something today, I would try to focus more on the end user experience and building something that people are like truly delighted to use that gives them something they can't get somewhere else.
Awesome. Thank you. Guys, thank you all so much for coming. It's really been a pleasure. You guys all did amazing. Can we get a round of applause for our panelists? Awesome. Thank you guys so much for coming out.